Welcome back, viewers. Alright, the time has finally come that we are going to start testing indicators. But before we do, if you have not watched my first video and the videos beyond that, you need to go do that right now. You will be extremely lost as to what we are doing here. At the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. Trust me when I say you do not want to miss out on this. There is a link below in the description to the first video. There is also a link below in the description to our Discord server. So you can join us as we discuss indicators and we discuss testing indicators. So, without further ado, our first indicator up on the list, I'm sure most of you have heard of it, will be the RSI, Relative Strength Index. Alright, so first of all, we are on the Euro Great Britain Pound pair. I have randomly selected this pair, so that way we're not cherry picking anything here. I believe, if I'm not mistaken, the take profit set by the ATR. Again, if you have not watched the first set of videos, you will be lost by this, so you need to go do that now. The ATR first take profit target will be 50 pips. So, what we're going to do here is $50 pip take profit. That way we can remember it. That means the stop loss will be 75. All right. Now, let's find the RSI. Excuse me. Let's see. RSI. And as I said in my previous videos, we are going to leave it at the default settings. We are going to test the RSI just like the experts say we should test the RSI. Of course, there are going to be experts with varying opinions, but the most popular opinion that I have heard as far as trading the RSI is going to be when the price action breaks above the 70 line or below the 30 line. That means it's either overbought above 70 or oversold above 30. We should watch for the RSI to come back in past the 70 line or the 30 line back into the grayed out area, and that is the signal to either go long or go short. So coming out of oversold at the top will be a short signal. Coming out of overbought at the bottom will be a buy signal. Now, I know from experience, the RSI gives very, very few signals. So we are going to start back here. Normally I only do a 1-year test, but I know that at 1 year, there are going to be very few signals, very few trade opportunities. Now, as I said before, typically this would be reason to not move forward with an indicator. We need to have a reasonable number of trades within a year's time to even consider using an indicator. If it only gives us 2 or 3 signals in a year, it is just not worth trading it. That's not enough to make any kind of reasonable profits. It's not enough to have any kind of reasonable amount of trades, even trading all the pairs that we traded across. So that being said, though, we're still going to test it. We are going to test it through 2 years, see what kind of percentages, win-loss percentage we get out of it, and then we will decide from there what we want to do with the RSI. All right, I'm going to go into replay mode here. I'm going to start at December 30th of 16. And we are going to start the process here. Again, we're waiting for the RSI to break above or below and then come back into the zone here, the grayed out zone. That will be our signal. Okay, so here we have a short signal. It would be technically short on this large candle here. So we need to let it play out a little bit and see what happens. Looks like we took a win on that one. Don't even have to measure it. I'm going to mark wins with a green line, losses with a red line. All right, moving on. As I said before, if you do not use TradingView, it is a great platform for backtesting and paper trading, as well as trading in general. There is a link below in the description that if you sign up for a paid TradingView account, use that link, you will save a little bit of money, and I will save a little bit of money. Definitely not getting rich off of it, but every little bit helps. I don't know about this one. Let's zoom out here. Sometimes you have to do this. Yeah, that definitely looks like it broke and then came back. So let's consider this one. Let's let it play a few more candles here. Let's enlarge it a little bit so everyone can see. Let's actually just go ahead and measure this out here. So that would have been the break. This would have brought it back in. We would have entered right here. And yeah, we would have taken a win. I think we had another one right there. Break and then enter back in. Let's see what it does here. Ooh, that does not look too good. Let's see. So this was the break. This was the enter back in. Close of this candle would have put us on that candle. Let's measure this down. 41. Nope, definitely did not get that. And we would have gotten stopped out. It's our first loser. Change the color here. Boom. All right, moving on. One thing to remember about the RSI, oversold, overbought, is the fact that this indicator was designed, like many that we will run across, to trade stocks. It was never designed to trade Forex. Forex, realistically, yeah, that went out, that came back in there. Close of that candle would have put us on that one. And bummer, that would have been a loss. Forex technically does not have an overbought and oversold. These are not stocks. These are not prices based off of, let's see, so there, came back in here, close of that candle would have put us here. Wonder if that got it. Nope. See what it does. Oh, there we go. We got it there. Okay. These are not stocks that are based off of a company's earnings, a company's ability to turn a profit. These are currency pairs. The price can go as low or as high as the banks determine. So came back on that one there. I think we may have got stopped out here. Yeah, took a loss on that one. And so if you think about it in that way, that we're using an indicator that was designed for an entirely different type of trading. It's not to say that it does not carry some benefits, but it will mostly be psychological benefits. The fact that so many people have learned about the RSI, and I'm sure there are lots of people out there who use the RSI, that makes it almost a self-predicting indicator. It's not really the fact that a currency pair is overbought or oversold that moves the RSI. It's the fact that so many people believe the indicator is giving it a signal to do something, and therefore a mass of people move the market. That one. We may have pulled it out on that candle right there. We did. Win there. So as you can see, the RSI runs and runs for months and months and months and gives no signal whatsoever. That can be problematic in itself. Oop. What do we get there? There. That one. Did we get it? Looking for 50 pips. And we got it. RSI doesn't seem to be doing too bad now, does it? There. Came back in on this one. See what these do. And let's see. There. Came back in here. Ooh, boy, that is close. Let's see. The open of this one is 89.85. And the high of this is 90.52. Oh, we're still good. Go back here. Pull it down. Looks like we got a win on that one. Getting close to the 2-year mark. There. That one came back in there. Looks like a win to me. Let's measure it out. Here. Definitely. Just a little bit longer here. We'll be at the 2-year marker. We will tally up our wins and losses, our total trades. Alright, that's it right there. So, for 2 years, we are at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're at 10 trades. That is not very many trades at all. Yeah, not many at all. So we need 6 winning trades. 1, 2, 3, 4, 5, 6, 7. So it meets the criteria of the 60%. Like I said, the problem is, and I knew this from the beginning, just from experience, it just does not give us very many trades. Another thing that I don't like about the RSI, again, I've played around with it before to see. I mean, I haven't really dug into it a lot, but I mean, what I saw from my initial testings back as I was building my own system was first of all, the number of signals that it gives. It's a big red mark against it. 2, take for example, this area right here. That trend right there. What I don't like about the RSI is it never gave us a green signal. It did here, but it never in here did it give us a green signal. It gave us these reversal signals. One here, shorting against the major trend that's happening. And you can see it even did the same thing here. We have this trend right here, and it threw this reversal signal at us. I don't like reversals. I find that often you will get faked out on reversals. I like trends, and I know for a fact that my personal system right in this general area here would have given me a confirmation to go long as the trend was confirmed, and I would have rode this for a good ways, maybe the entire thing up to here, before my exit signal told me to get out of the trade. I do not like the fact that the RSI just throws these random signals in the middle of trends, and a lot of them again are reversal signals. Right here you see, just as this started into a downtrend, it gave a signal to go long. Here's just kind of chop, here's just kind of chop. Here's as this downtrend started right here, it gave you a signal to go long. And then it attempted right here to give you a reversal signal. Now in this case, we got some pips out of it. But what we wanted was to ride this entire wave right here. Same way with, no, it's not a huge one. Same way with this. We would like to ride that entire wave. Get in somewhere around here as you get confirmation of the trends taking place, breaking out, and ride it until your exit signal tells you to get out. So, the RSI tends to just throw these very sporadic signals out there. And it doesn't seem to work very well, doesn't seem to really confirm anything, but again, we are trading it like the experts will tell you you need to trade it. Of course, again, as I said at the beginning, I'm sure there are dozens of different ways that experts, or even you right now, the viewers watching this, are screaming at me, but that's not how you're supposed to trade it. You're supposed to do this or that. And that's fine. If you are seeing something that I am not seeing, I am perfectly okay with that. Get on Discord, show us your back test, show us what we're doing wrong. Give us an idea of what is a better way to trade the RSI that's going to give us good trend entry signals, is not going to throw us these weird random reversal signals in the middle of trends, and is going to give us more signals within a year's time. If you can do that, then we will be more than happy to dig into this a little bit more. But I do want to dig into something here myself before we call this video done. Let's do this. Let me put a zero cross. It'd be 50. Would be the zero cross technically. See if that does. Doesn't look like that's going to do much. I wonder if we were to modify these to, say, 55 and 45? Maybe change the input 30? I'm wondering if the RSI wouldn't make a good volatility filter. See how we get these long, drawn out areas right here of basically, nope, these long, drawn out areas here of basically just chop, ranging where the market's not really doing much. And you see here how the RSI is staying within these lines. Let's speed it up a little bit more. I know this video is getting a little long, so I won't keep going too much. But I am wondering if the RSI, a rule could be to go long, the RSI needs to be above. To go short, the RSI needs to be below. See, by its very nature, the RSI is a strength indicator. It is reading the strength of what the currency pair is doing. Generally, as it gets above 70, it goes into what's called overbought. Or once it gets below 30, it goes into oversold. But I'm thinking if we narrow in that zone, the overbought area of 55 and oversold area of 45, above and below, actually gives us an indicator of strength in the movement. While the lines you see here, where it kind of starts to break out but doesn't go anywhere, comes down here, kind of starts to go into a downtrend but doesn't go anywhere. You see what I mean? See how it's kind of filtering out some of this choppiness, with the line being in between the overbought and oversold. We wouldn't take a trade because it doesn't have much strength behind it. So, all right, everybody, I'm going to call it here. We're going to put the RSI into the list. We will tinker with this a little bit more, but what I really want is for all of you to brainstorm, to think about it, to tweak it, play with it. I'll do the same. Let's see if we can't turn the RSI into something worthwhile to put into our list, and we can then start to compile a master list of indicators that all can be used for different purposes. I outlined the different tools that we need, so this could go under the volatility slash volume tool section of our master list, and we can go from there. So, all right, everybody, take it from here, play with it, tweak it, do what you guys do best, see what we can come up with the RSI to make it better. If you have not subscribed to the channel, please do so now. Click the subscribe button below. Turn on notifications so you don't miss any of the videos. These videos are very important as we are running through the indicators, so that way you know what we are testing and what we aren't testing, and you know what you can jump in and dig into a little bit deeper yourselves, see what everybody as a collective can come up with. Also, as I said at the beginning of the video, there is a link to our Discord server down below as well. So, instead of throwing all the conversations into the comments are great. I love the comments. comment below as well. But the main conversation should be taking place on our Discord server, so that way everybody can keep track of what's going on and everybody can communicate back and forth quite easily. So, all right, everybody, that's going to be it for the RSI. I will see you on the next video.